Hello everybody. Firstly, I'd just like to welcome you to this special webinar where we'll be talking about the US company earnings season and the opportunities it represents to traders. We'll also talk about what happened in the last company earnings season in July and the prospects for October's earnings season in what promises to be another very good set of results for many companies. My name's Sasha and I'm a financial analyst from the research department at Fortrade. I'm delighted to have you with us. If you have any questions, please call us and ask to speak to a senior account manager who'll be happy to help. Before I go any further, please take a moment to read our risk warning disclaimer. I'm sure you know that although gains can be made trading CFDs, losses can be incurred too, and you need to be aware of this. And now let me explain what a market opportunity is if you don't know. A market opportunity is a one-page briefing containing market analysis, and our goal is to provide you with a simple to understand opportunity to trade in the markets. We will select an instrument such as gold or a currency pair and tell you our very best estimate on its price direction so that you can trade on it if you want to. Market opportunities are produced by us at the research department on a daily basis, according to market conditions. A market opportunity consists of fundamental analysis, geopolitical events, and technical analysis that includes a pivot point and support and resistance levels. So here is an example of a recent market opportunity. You can see fundamental analysis on what's going on with the euro-dollar currency pair. You can see this is a downtrend opportunity over a weekly period, since our analysis suggests the euro would decline in value against the dollar. At the top you can see some geopolitical events and fundamental analysis that can influence the euro-US dollar currency pair. For example, you have a bit here about the trade war, stating that the US dollar acts and benefits as a safe haven asset when trade war tensions increase, or the situation in Italy, which has negatively impacted the euro. When using a market opportunity, it's vital to look at the pivot point on which the calculations are based. In this instance, if the price reaches 1.16906 that you can see on the right hand side of the screen here, this shows the right moment in our estimation for opening a trading position if you decide to trade on this market opportunity. Okay, so you've seen market opportunities, what they're all about. Now let's talk about the earnings season and why it's important for traders. So what is the earnings season? Earnings seasons are months of the year when a majority of quarterly corporate earnings are released. Earnings season occurs in the months immediately following the quarter ends results of the year. Earnings seasons fall in January, April, July, and the one coming up, October. For traders, this means that almost every large company on the market will report their results in these months. And depending on the results and previous expectations of analysts, this can have a great effect on the prices of the stocks you trade with, and is therefore a great trading opportunity. As an investor, you should keep an eye on analysis, which will give valuations which will state whether the current price of a stock is, for example, overvalued or undervalued before that company reports its earnings. You can, of course, request such information from your senior account manager. So when do the big companies report? Well, the big banks always kick off the earnings season, and this October the big guns begin to declare their earnings on October the 12th. That's on Friday, with JP Morgan and Citigroup among the first. But many of the most traded stocks declare from mid-October until the end of the month. Microsoft, Google or Alphabet, Amazon, Intel and Boeing will reveal their earnings in the third week of October, while Apple, Facebook, Alibaba and Visa are due to announce their figures in the last week of the month. You should bear in mind that at this stage, some company earnings dates are subject to change. So what do company results show so far? Well, it's early days and only the smaller companies have reported, but most analysts predict a strong showing from many companies. Of the 21 companies in the S&P 500 that have reported earnings to date for the third quarter, 85% have reported earnings above analysts' expectations. This is above the long-term average of 64% and above the average of the past 4 quarters of 77%. But bear in mind, this is just a handful of smaller companies that have declared so far. So for some context, let's take a look at the earnings results of some of the most popular stocks last season. And then I'll give you an idea on our expectations for this season of which sectors and companies may perform well. In short, it was a record earnings season last season round, with 80.4 of the S&P 500 company earnings for the second quarter of 2018 reporting earnings above analysts' expectations. This is above the long-term average of 64% and above the average of the past 4 quarters of 75%. Much of the earnings outperformance comes from telecoms, healthcare and tech companies. In tech, 93% of company earnings have exceeded forecasts in the past. But let's take a look at some of the most popular stocks and how they performed last quarter. Amazon, Tesla and Facebook. Amazon, the electronic commerce giant which seems to be undergoing constant expansion, reported second quarter results that beat earnings per share but missed on revenue by $470 million, although the company had 39% year-on-year revenue growth. Amazon posted their results post-market, but in trading on the regular market, Amazon stocks opened up by 3.94% on those results. Facebook had mixed results last quarter and its press conference following made big headlines. The stock beat earnings per share but missed revenue targets, recording $13.28 billion, a miss of $120 million. When regular trading opened, Facebook stock fell by 17.5%, with the price falling further by close of trading. At its press conference, the company announced its growth rate would drop by high single digits for the next couple of quarters. On August the 1st, Tesla missed its earnings per share target, but beat its revenue target handsomely. Upon the opening of the markets, its stock price jumped by 6.9%, and it pushed even higher by the end of the trading day, as investors were persuaded that the company had turned the corner with its production issues and profitability. So what can we expect this quarter? Well, most analysis suggests that bank stocks stand to benefit in the short to medium term from higher interest rates, bond yields, and some of the fundamentals bearing this out too. When banks borrow at a lower rate and lend at a higher rate of interest, they profit on the difference. Goldman Sachs analyst Richard Ramsden is also optimistic on bank stocks, specifically on JP Morgan and Morgan Stanley. He says negative macroeconomic views should be baked into stock prices, while profitability may reach a post-crisis high. He believes that banks can top consensus expectations. This is borne out by the graph you can see in front of you, showing the profitability of the biggest US banks, which has been helped by tax cuts, all moving in an upward direction, with the exception of Morgan Stanley. So the banking sector may be a good one to consider. The energy sector currently has the highest earnings growth rate of any sector. It is expected to earn $20.3 billion in the third quarter of 2018, compared to earnings of $10.1 billion in the third quarter of 2017. So this one's another potential one to consider. On the other hand, some of the tech stocks like Facebook and Google are facing increasing regulation, scrutiny, and in some cases large fines. So a buy order on such stocks should be made with this in mind, as well as whether the companies will beat earnings expectations. This follows the Facebook's Cambridge Analytica scandal, in which user data was misused on the Facebook platform earlier this year. In fact, there are reports today that Google has been revealed to have done something similar with its Google Plus platform. Another note of caution has recently been sounded by Deutsche Bank on the semiconductor stocks. The bank believes the industry may face a significant downturn. AMD and Nvidia price targets haven't been reduced by the bank, although the AMD stock has performed very well so far this year. The obvious, the trade war, continues to be one of the most pressing concerns. As has been outlined by now, companies which have been the worst affected as far as trade war tensions are concerned include Caterpillar, Boeing and Apple. This is due to the fact that they all have operations in China or depend on selling products to the Chinese market. Despite these concerns, Boeing has been signing order after order for new aircraft, and its price has grown some 10% since the last earnings season, despite well-publicized delays in aircraft production. Industrials which use steel and aluminium face higher prices due to US tariffs, forcing them to purchase more expensive US steel or to move operations and production to foreign countries to avoid tariffs. Apple's stock price too continues to grow, recently boosted by an exemption from tariffs that it received from the US, meaning its iPhone and iWatch won't be subject to tariffs. According to FactSet, stock analysts appear optimistic about the coming season for corporate quarterly results, as they have trimmed their profit growth estimates by a far smaller degree than usual. Per the data, analysts are forecasting earnings per share of $40.54, companies in the S&P 500. At the start of the third quarter in July, they expected EPS to be $41, representing a 1.1% decline. Over the past 15 years, the average decline in earnings estimates has been 3.9%, or more than 3 times as extreme as the current quarter's rate. Of the 3 stocks we analyzed, it's worth taking a look at some developments for Tesla. It's an exciting stock in many respects. CEO Elon Musk, not unlike Donald Trump, has the power to single-handedly move Tesla's price in either direction. Earlier this year, Musk claimed he had the necessary backers to turn Tesla into a private company, causing Tesla's stock to skyrocket. But when the US Securities and Exchange Commission investigated, they eventually forced Musk and Tesla to pay a $20 million fine, and made Musk resign as chairman, but to retain his CEO position. As a result, Tesla stocks sank by 10% upon opening on September the 28th. And although it recovered soon after, the stock is now below these levels. It will be interesting to see if Tesla's delivery figures and profitability are a positive surprise this time round. In any case, another strong earnings season is expected, and over the next month and a half, there will be multiple trading opportunities to be had. And of course, we at ForeTrade will be following the earnings season and its impact upon stocks very closely. So please do get in touch with a senior account manager if you have any questions or want to take advantage of the trading opportunities that this earnings season will present. Until then, goodbye, and please join us at ForeTrade again soon.